What's up, everyone? My name's Eric. Today is Friday, the 6th of August, 2021. This is my weekly wrap-up for August 2 through 6. And the bottom line for this week is I locked in $628 of profit for the week. That used $11,500 in buying power. And when you do the math, that is a 5.5% total return on capital, or return on buying power, or return on investment, whatever you want to call it. So that's pretty good. That beats last week for me. I think last week I had like $425 or $50, something like that. We'll look at some breakdowns here real quick. 4 of these were actually monthly options that I closed out, these top 4 actually, and then the other 8 were down here as weekly contracts. And then even with all of that combined, the average time was 7 days, 22 hours that I was in the trade. My average opening credit was $1.08. Average close was 80 cents. And my average profit was 50 cents. I did that with 17 total contracts, which is 12 total trades. I'm not sure how much some of this really makes sense. Like I said in last week's video, this 108, that's going to vary a lot because, if you're doing a monthly contract, you're going to get a lot more, like $1.60, where some of these weeklies, only get like 32 cents. That was a 24-cent roll. This is 49 cents for charge point. But then on the other hand, this was 3.30 for T-Doc. So it kind of just depends. And if we scroll over here a little bit more, the average percent of pop at open was 68%. That's probably worth something, whether it's the monthly or the weekly. I'm shooting for somewhere around 70% as my kind of minimum pop at open. But again, some of these vary a lot more than others. This Tesla one here was 79%. This mini ES was 96%. But then, when I rolled it, that's only 56% for the CCL trade. So again, you gotta compare everything, right? You can't just blanket statement everything. I don't know. It seems like it's a little bit helpful to see that stuff. So that's why I tally those up real quick each week. Other than that, the only kind of caveat I have with this week is that I still have 2 trades that I rolled out. The first one is this Pinterest trade that I am still in from earnings. I tried a 1-day earnings. I rolled it out the next week, and then I rolled it out again. And then also down here at AMD, I am rolling that out again as well. And the AMD one is actually a short call, so I want the price to go down, where Pinterest, I need the price to go up. Oh, one more thing here. I guess we'll look here at Pinterest first. Pinterest, I rolled it out, but if I did not roll it out, I would have lost $888 already. And with AMD, I would have lost $628. So that's why I'm rolling out, and hopefully I'm going to gain, either gain that all back for a profit, or at least at a minimum, I will reduce my loss. And then, so if we go back here to the current week of what I did close out for winners, CCL here, I rolled, and when I rolled it, I was at a negative $142, but then I rolled it out and I made money back, and sure enough, I walked away with $46 profit. And then T-Doc was a similar situation. I rolled it out and I had a negative 172 loss when I did the roll, and then it swung back quickly in my favor, and I walked away with $142 profit overall. So that's exactly why I roll trades. I stick with the trades as long as my assumption that the direction I've chosen is still true. And as long as I think the same thing, I'm just going to roll with it, and eventually I will profit. If I sell a put and then the price just keeps going down and down and down, at some point my assumption will change and be like, okay, maybe this isn't worth staying in any longer. And then I'll just have to cash out and take a loss, right? Which does happen on occasion. But in theory, as long as you have enough buying power available, which I leave roughly 50% of my buying power. Sometimes when I push it, I'll only leave about 25% of my buying power available. But in general, I leave roughly 50% of my buying power available so that I can roll out trades if they go against me, and or just within, the same week or month, trades can temporarily swing against you and require more buying power or more maintenance capital, right? And if you don't have sufficient buying power left over, then you will get forced into a margin call. And that's pretty much never a good thing. So it's not the end of the world, but you'll end up, having to get forced out of trades, and those could be for losers or winners or whatever. You just don't know. So you never want to have your hand forced, right? If you leave half of your account available for excess buying power to ride out the highs and lows of the movement of the stocks, pretty much you won't have any problems rolling trades out or adjusting trades or doing whatever. All right, so there's not much else to say really. I locked in 628 profit for this week. I rolled out those 2 trades to next week, and I'm guessing Pinterest, unless there's a really big move, I'm probably gonna have to roll that again to even the next week. Currently AMD is looking pretty good in my favor, so hopefully that continues. And otherwise, it was a good week. I beat last week's total. Let's see, what was last week? Last week was 475. So I beat last week, which, hey, I'll take it. You know, this did have the 4 monthly contracts here. So that kind of skews my current system a little bit, because my current system, I'm really liking the weekly contracts, but I do mix in the monthly trades every now and then, because just certain tickers and their buying power and stuff are really are better set up for a monthly expiration than a weekly. You'll see me from time to time put in the monthly expirations, but in general, I really like these weeklies. It's just kind of, I guess it's more of like immediate gratification, right? Whether I'm right or wrong. And I kind of like the fact that I can, if I wanted to, you know, within roughly 1 week, I could essentially shut down my whole account and go cash if for some reason I need to do that, right? And I'd most likely come out break even or even ahead in profit. Where sometimes when I'm doing all monthlies, if you said, hey man, we got to shut this down, we have an emergency, we got to pull out our money, you know, sometimes that could be a significant loss on the monthly, even though all of your positions are still going to plan, right? Sometimes they just temporarily turn against you for like a week or 2 weeks even, and then eventually time decay kicks in and those monthlies will pay you. Well, when you're on the weekly expiration, you know, time decay works much faster, obviously, right? You know, the first day you gain 1/5 of the time decay in your favor. The second day it's a quarter, then a third, and a half, you know, so it all works much faster, and it's all kind of the same system overall, though. I essentially look at the 30 delta, whether it's the put or the call. 30 delta is usually kind of my max. You know, every now and then, if I'm especially bullish, I will go closer to an at the money strike. But in general, you know, I'll go 30 delta or lower. And, you know, right off the bat, that gives me a 70% probability of profit. And the farther out of the money you go, the higher your probability goes, but the lower credit you will receive. So it's all about risk reward. You need to figure out what that is for you. You know, get your own list of tickers here, start tracking those tickers so you know kind of how they move and what they're doing, and then start with these, you know, 30 deltas or farther out, selling the premium, collecting it, and moving on. All right, I think that covers everything. If you have any questions, let me know. Otherwise, have a good weekend, and I'll see you in the next video.